I appreciate everyone coming on, and hopefully we'll have some great information for you guys today. I know we will have some great information for you today. First, I want to thank the RBFC, the Revenue-Based Finance Coalition, for sponsoring this video. So they are a group of companies that essentially are a coalition that is fighting for the industry. It's brokers, funders, other select vendors, technology providers, to help educate Congress, federal, state regulators, other officials on issues related to non-bank commercial finance. So thanks to them. I want to introduce our guest, a special guest today. He is the president of CFG Merchant Solutions. He is Bill Gallagher. He's been the president of CFG since its inception in 2015. Prior to that, he's been chief credit officer of CapFlow Funding, CFG's sister company. He's also held various senior level positions in capital markets, investment banking, in the institutional fixed income divisions of Lehman Brothers and Barclays Capital. So, Bill, thanks a lot for joining us and doing this.
Yeah, my pleasure, Shane. Thanks for having me.
For sure. So, let's kind of jump right into it. I talked a little bit about what we're going to talk about. So, what's kind of happening on your end, the state of the industry, your perception on the current trends, what to look out for that as we're finishing 2023.
Yeah, 2023 has been a very interesting year in the space. I would characterize the market as very choppy. One that definitely calls for a conservative and disciplined approach to underwriting, risk management, and portfolio management. And just to go back and give a little bit of the history. Mm-hmm. Obviously, the space went through the most extreme stress case scenario in the COVID shutdowns of 2020. Right. A lot of people had mentioned that the product really hadn't been tested since it really kind of expanded in a significant way after the financial crisis. But nobody envisioned a situation whereby 50 or 60% of all of our portfolios would stop paying immediately upon the government mandated shutdowns during the pandemic. So I feel like the product came through that test in flying colors. I think we expected a ton of carnage. That there was some pain, but that just didn't come to fruition. And I think most portfolios healed rather quickly. Ours much more quickly than we would have envisioned at the beginning of it. And 2020 ended up with a decent setup headed into 2021. 2021 was an extremely strong year for the entire industry. Most of that on the heels of stimulus dollars that had been pumped into the economy. Mm-hmm. And then I think I would characterize 2022 as a little bit of a reality check. The Fed started raising rates. Inflation really started to have an impact. And as you know, the characteristic of our merchant is that they are small businesses that are thinly capitalized. They do not have a lot of cushion for any kind of margin compression, and they were the very first ones to feel the impacts of an economic downturn. And that really started, I would say, in earnest in the second and third quarter of 2022. I think throughout the industry, delinquency started to tick up at the end of 2022 and headed into 2023. And then I would call 2023, this past year, a little bit of a leveling off. And I think that is the result of a few things. I think we've seen a contraction in credit across all capital markets. As we all know, the reason we're in this space, this alternative space, is that banks can be extremely conservative, and in times of economic uncertainty, they get even more conservative. And that trickles down to asset-based lenders, equipment financiers, factors, and ultimately to the revenue-based product. And the mini regional banking crisis or scare that we had earlier this year in the second quarter didn't help things. Silicon Valley Bank, Signature, First Republic, it just further contributed to this tightening of credit across the full commercial finance industry. And I also think the market in general repriced itself a little bit. As we mentioned, our merchants, are thinly capitalized, and really the product should be priced at a discount to cash flow, because anyone who has underwritten or funded a transaction knows that the cash flow it can fluctuate, and the product is set up for that. So cash flow can definitely diminish, and I think for a while the product had been priced very aggressively, because I think funders felt that you really couldn't lose. But as we all know, in financial markets, it's just not the case. So I think that was a healthy repricing of the overall market. And now I feel like a lot of funders in the marketplace had intentionally cut back on funding volumes, and been very cautious on certain industries, and SIC codes. And then, I'll just lastly say that, I feel like the setup for our product is pretty favorable. I think the next year we're going to definitely be living with this very bumpy market that you have to be careful in. But I don't see this bank. I don't see the banks loosening up for a period of time. And just like our merchants were the first to feel the impacts of an economic slowdown, I think if the economy starts to improve, if rates come down just a bit, I think they'll start to feel the benefits. I think the one question mark is the consumer. I think there's just a mixed camp on that. Some feel like the consumer is pretty wounded, and others feel like it's pretty resilient.
And that really, I mean, we're just passing Cyber Monday now and Black Friday, and I saw, kind of record numbers for like Shopify, for example.
Yeah.
So there are some spending going on, but it might just be these big days. We'll see, kind of going forward. You mentioned kind of reset the pricing. Any examples or anything else you can just kind of detail that, what you mean by that?
Well, if two funders were to sit down and were to agree that a file was worth a $30,000 financing,
okay,
generally what you would see is a pretty broad range of offerings. But you may see someone jump out and offer that merchant, $40,000 to $45,000, significantly over what may be suitable. And now I think you're seeing that merchant be priced at more of $20,000, $25,000, a discount to allow for some kind of reduction in sales.
Got it. Okay.
And I also think certain industries were definitely have been approached more conservatively, and that's transportation. We all know some of the tough times that transportation has had over the past over the past year, and construction. Those are just two industries and SIC codes that you just cannot avoid in our industry. So it's a matter of pricing them appropriately.
All right. And so that kind of leads into our next topic, CFG, really some operational notes and how CFG works. Tell us a little bit about that.
Yeah, so we feel like one of our differentiating factors is we feel like we have one of the most unique platforms in the entire revenue-based financing industry. We have individual underwriting teams who have a revenue sharing arrangement with the company. So they have their own dollars in every single transaction, and they share in the upside and the downside of the performance of every single transaction. And I know that there's a lot of companies in our space that spend a lot of time and effort to instill in their underwriting departments the mindset of, would I fund a transaction if this were my own money? And we naturally have that in our platform because our guys are co-invested in everything that we do. So we essentially, we provide the company CFGMS provides the capital, the infrastructure, the operations, the finance and treasury, financial reporting, and we give our underwriters and their teams autonomy to make their own credit decisions, and manage their own portfolios as they see fit. Now, obviously, we have compliance and regulatory, and we've had a culture of leading with best practices since we launched the platform in 2015. But they really are managing their own businesses within our CFGMS platform, and that gives them the ability to make real-time adjustments and decisions as they see cash flow either improve or deteriorate, within a certain industry, single transaction, bucket of transactions, cohort, whatever that may be. And it creates this alignment of interests that we have with our underwriting teams, whereby they get compensated on the performance, solely on the performance of their portfolio of transactions. So they are not forced to put on any transaction that they are not 100% comfortable with. And they get compensated solely on two things: funding volume and performance of that funding volume, with performance being absolutely number one. And I think that's that's a really important distinction. I think it allows us to offer a very wide range of offerings to the marketplace. We fund a ton of micro files, but we also can go up to what we would consider the B+ to A- range, $400,000, $500,000, $600,000, $700,000 transactions, factor rates in the 1.3s, and terms out 9 to 12 months. And then just a few statistics.
Sure.
We had a pretty significant milestone in the second quarter of 2023. We crossed 1 billion funding since our inception in 2015, something that that we're extremely proud of. Also in the second quarter, we closed a funding whereby we were granted an investment grade rating, and we were able to raise 20 million in corporate notes through institutional investors, and that, combined with our $100 million credit line, has left us very well capitalized, and very well positioned to take advantage of any opportunities that may present themselves in the marketplace. And in the month of August, we had record funding volumes, 34 million across almost 1,400 individual transactions or units. So as you can see, we do just a ton of volume and transactions. And then obviously we're very proud of the work that we've done on the regulatory and compliance side, whereby we've been well ahead of all of the requirements for 2023 for California, New York, Utah, Virginia, Connecticut, and then obviously we have Georgia and Florida coming in January. And then lastly, we have historically had a largely manual underwriting process, which we like a lot. We feel like it services our ISOs very well, but we're also trying to further leverage technology in order to introduce some efficiencies into the process, right? I mean, everybody is looking to get more efficient. The name of the game in this business is speed and efficiency, and so we've made some serious strides on the technology side and development side to do just that.
Anything specific you want to share in that regards, or even on the horizon?
Well, we this year we introduced API for our ISO partners.
Submissions.
We also have an automated in-house ingestion platform. We've helped to organize our in-house collections team for collections. We leverage both our in-house team and our outside third parties. As you can imagine, with the number of units that we fund, 13, 14, 1,500 a month, you're talking about upwards of 20,000 units in a year. There's that needs some serious organization. We've and then projects that we have on the horizon are SMS outreach to our merchants, automated emails for our underwriting teams to utilize, and then obviously the further work that needs to get done on the regulatory and compliance front.
Which is a lot, I'm sure. The undertaking for the regulatory, coming up with all the different changes. All right, so let's talk about tips for brokers, and actually for all the brokers on this Zoom, if you wouldn't mind, just drop in the chat the word broker, and that way we can kind of have an idea of how many brokers are on this Zoom. But yeah, talk to us, Bill. I'm sure there's a million tips that you can go into, but what's kind of your things that you want to say, best practices, tips for brokers, kind of increase their sales and conversion rates?
Yeah, so we and guys who know me have heard this from us before. Transparency, communication, and the relationship. And I think that as the industry really came to fruition, back in call it 2010 to 2015, I think there were a fair amount of folks who were drawn to the space based on very quick commissions that you can make. And I think that over time, over the last call it 7, 8, 10 years, I think the industry has really evolved. It's something that we stress, and the ISOs and referral sources and brokers that we line up best with are those that are looking for a very long-term, repeatable and sustainable relationship. And that's being completely honest and transparent with your partner. And it is playing the long game, right? We're working to build a portfolio with CFGMS, knowing how that paper performs, knowing our credit criteria, lining up with that criteria. Obviously, I mentioned this already. Speed is the key. If there are pain points anywhere in the process, identifying them and communicating them, immediately, I think helps a lot. And then I would just say, we see a lot of recycled paper. I would encourage brokers to look for unique and non-traditional sources of leads and referrals. And then lastly, we'll talk about this a few times as we move on. But the renewal book is and I'm going to mention this a few times because it's extremely important to us. and it's a place that another place that we feel is a real differentiator. We have an outsized renewal rate with our merchants, and I think it's a combination of a few things. It's us stressing the customer service aspect of the business. Treat all of our merchants with professionalism and respect, even those that come in here without the best intentions. And we work very, very closely with our ISO partners to make sure that anything is even close to renewable is renewed. I call our guys animals about their renewals, and that's the way we view it.
And it's part of the whole long-term outlook and kind of business process for brokers, right? I mean, the real kind of margin or profit is going to be in your renewals because it's less work, and the more you can get of those, it's going to help build your business. Okay, so there actually is one question. We'll get to the questions. Let's see in a little bit here, but talk to us about really communication with the funder. So you kind of alluded to some of the things, but from submitting a package, now that you have APIs, just communicating with sales reps, ISO reps, that sort of thing.
Yeah, so I would, this is a very fast-paced and dynamic marketplace, and everyone, funders and ISOs, are moving at the speed of light. The most valuable commodity that we all have is time, and so I would recommend and advise ISOs that obviously we're all trying to figure out how we move as quickly as possible and still maintain performance. But sometimes the most valuable conversations are those where you step back and take a few minutes, away from the funding activity to really get to know each other's operations, right? How have an appreciation for really what the funder is looking to accomplish, and what the broker and the ISO are looking to accomplish. I think the broker community has an extremely important role in this ecosystem, and they have the ability to really help their merchant get the funding that is most suitable for their situation. But they're also running a business, right? They're paying for their leads, they're paying for the training of their people, and they're looking to convert. And I think the better that each party kind of understands the other's perspective, I think the smoother the process can be.
Sure, and really, I think you even touched on it before. Kind of the honesty, transparency between both. The funder, ISO rep, and the ISO or broker themselves. The more transparent, instead of kind of hiding things or just not submitting information or not giving up all the information possible. Do that and work together to find to resolve either the deal or to get the deal done or whatever the case may be. That was kind of my experience back in the day on both sides of the coin, as an ISO rep and then as a broker. All right, so I wanted to let's come back to a couple of things with CFG in a minute. We did have a question directly to me about the RBFC, so let's touch on that and Funders Forum, and then we'll come back to a little bit more. So the RBFC, as I mentioned at the beginning, it's a coalition that you are part of, that a number of companies, brokers, funders, other vendors that are informing, help educate Congress and state regulators and officials about the ongoings of the industry so they can be more informed to make decisions. So talk to us about what this question is, what have you seen as the benefits of being a member of a trade association like there are specifically the RBFC? And in the industry, why is it important to have an association for the industry?
Right. So let me first start by saying that as we talk to capital providers, senior lenders, stakeholders, equity partners, about kind of the top three things that keep us up at night. Obviously, asset performance is number one, but regulatory and compliance is absolutely in the top three, if not the top two. I think everybody on this call wants to be doing what we do on a daily basis for the next several decades. And so the advocacy that RBFC provides could not be more valuable to the industry and to all of the participants, within it. And I mentioned a number of states, where we've been compliant, and the positive outcomes that have come from those states have been as a direct result of the efforts of RBFC and our state partner Catalyst. We would not have the legislation and the requirements that we do today, which are very favorable to the revenue-based finance industry, without those efforts and without that strategic approach to really being proactive and offensive in telling our story, how the product works. I think if you asked 100 of our merchants or clients whether they care about price or access, the very first thing that they would say is access. Please don't take away my access to capital. I'm a business owner. I run a business. I can make decisions on price, but if you take away my access, then I have some problems when I have a capital need. So we've been members of our RBFC since its inception in 2016. It has now nearly 30 members. The membership is thriving. As we've run our Funders Forum conference, started in 2019 with just a little over 100 people. 2 years off for COVID. 2022 we had over 250 people, and 2023 saw over 600 people, and we expect that number to grow significantly in 2024 as the venue moves to the Hard Rock Casino in Hollywood. And then just this past fall in New York City, we ran the first ever Broker Expo, really concentrated on the needs and the concerns of the ISO and broker community. And that was 325 attendees just on the first glance. So I would encourage everyone to become part of the trade group. I think a big part of what we do is educating lawmakers and legislators, and a lot of the activity has been at the state level, but we also have 1071 kind of hanging over our head at the federal level, and they really do need to learn and know and hear firsthand from folks who operate in this environment on a daily basis the benefits of the product and exactly how it's structured.
Right, 100%, and agreed. And I'm a part of the RBFC, so full disclosure there. And Funders Forum is coming up. I dropped the link in the chat, everyone, for both the Funders Forum next year as well as the RBFC, so you can check that out. And looking forward to the next one. It should be great. It's March 5th and through the 7th of 2024. So let's just get back to on how to onboard with CFG, kind of what things that what are the advantages of becoming a partner with CFG, and those types of things.
Yeah, we try and make it as frictionless as possible to become a referral partner, ISO partner, broker for CFGMS. Since we started the company, our emphasis and our sole emphasis is on funding. We've never had a sales arm, a sales origination or marketing arm, like the way a lot of other companies have started. So we rely solely on the flow of our third-party brokers and ISOs, and that's those are relationships that we take very seriously because it's our lifeblood. So we'll look at how much a flow that we anticipate from a referral source, what that flow might look like, what type of paper, estimated monthly volume, other funders that you deal with that are in your top three, and we'll use that to assign an internal CFGMS rep that is the best fit for what we think that ISO partner may be. Obviously, Shane, I'm a homer here, but I think there are tremendous benefits to being a CFGMS ISO partner.
Sure.
Like I said at the outset, we have an extremely broad range of offerings from the micro all the way up to the extremely large files. CFGMS has
when you say micro, let me interrupt you.
Yeah.
Micro meaning what exactly?
So, different folks have different interpretations of micro. We think about it as files that are, 20,000 and less or 15,000 and less. There's a lot of funders out there that they really don't feel like a lot of those files are worth the time. They're just as much work,
Right.
and you just don't get the kind of the revenue bang for the buck that you do on the larger stuff.
Sure.
We take a little bit of a different tact. We love the diversification play of the smaller files. We feel like there's less competition in that 20 to 25,000 and less. I think the sweet spot of revenue-based financing is in that kind of that 50 to 150,000 range. We like the space.
Sure. Okay.
And then I would say, we have a reputation for having strong, consistent, and reliable offers. So we may not be the strongest offer, meaning the highest dollar amount, but the offer that we give to our ISO partners is going to fund the next day. And when we sit down and have conversations with our broker partners, some of the things that they tell us that are pain points with other funders is when they get one of these outsized offers, then they get contracts back, they go to close it, and all of a sudden either the offering decreases or there are more stipulations needed in order to close, and then a file can potentially go cold. Whereas we may not be the strongest offer, but we are closing the next day. We stand behind the strength and reliability of our offers. Also, I talked about our manual process. Our sales reps are work the same way. Our broker partners can pick up the phone if they need a few more days, if they need a reduction in factor rate, if they need something that helps them close a deal, they can pick up the phone and get a decision maker and get that answer very, very quickly. And then obviously, we're trying to enhance the experience by introducing API and other automated ingestion initiatives to strike kind of the right balance between having the ability to have a manual in this world of AI real person contact along with automation.
And just for those who may not be too familiar with APIs, I mean, APIs essentially is going to allow the broker to submit their file with basically a click of a button from their own CRM to your portal or your system on your end, correct?
That's correct.
Yep. And how long does that typically take to get set up for your team and their team to kind of get it all figured out?
I mean, our development team is very good.
Okay.
We can get it done relatively quickly. I think where we've run into challenges is where the other side. API sounds great, right? It sounds like a great concept, right? An automatic pipeline into the system or into the funder, but a lot of times they may not be set up technologically to kind of go through that process. But if they are, it can be done kind of very quickly and very seamlessly.
Okay, great. Yeah, I mean, it seems like the way to go to speed things up and less errors and that sort of thing. But you still have the traditional ways of either directly with an email or a portal or whatever the cases are.
That's exactly right. I think another benefit for us, and you just touched on it, but I do want to just emphasize it is the data, right? Having accurate data in our system, being able to report that data back to our broker and referral partners, either in the form of conversion rates or performance data that can really enhance the relationship.
The technology, the AI, is there anything that brokers maybe should be doing on their end to take advantage of the new generative AI from your perspective?
You know, my feeling is, I mean, you're getting into probably a realm that is not my strongest suit.
Okay.
The technology, as you can
Yeah.
see from the very first the incept of the call.
Oh, the call.
But
Right.
you know,
Yeah.
we feel like I mean, we've made significant investments in technology over
Hmm.
the past 2 to 3 years. So we
Okay.
feel like it is here to stay. We need to embrace it, and we need to figure out a way to conform it to our business so that it provides the efficiencies that that we talked about earlier. And I'm sure over the next several years, we're all going to be adapting to these new technologies.
All right. So I am going to open it up to questions. So you guys can raise your hand. I'll call on you. If I don't see you for some reason, there's a bunch of people on this call. I think maybe probably reached our max, about 100 people or close to it anyway. And if you're a little gun shy, you can pop in the chat as I mentioned. And then kind of as you guys are thinking of your questions, and if there are none, which I'd be surprised if there weren't, I do want to thank RBFC again, a sponsor of this video. And certainly I can drop the links on there for the funders forum next year. It's in there. You shouldn't wait. They have a number of different speakers and everything lined up at the Hard Rock Casino and Resort in Hollywood, Florida. If you haven't been there yet, it's been redone. It's the big guitar hotel that you probably have seen on video anyway. So definitely check that out. Bill, while we're waiting on any questions, if there are any, anything else you want to kind of add?
You know, I would just say that again, I feel like the setup for our industry is very favorable and very positive for the next several years. And I would just I would just advise everyone to make sure that their company culture aligns with the best practices that the industry is trying to enhance. I think there have been some horror stories around our industry, and I would say that's the 1%. The 99% that I have come in contact with on both the funder side and the ISO side have been people who really care about the people that work for them, that really care about their individual merchants and their merchants employees, and really run a very sophisticated business. And so I would just encourage everyone to continue to follow that lead.
Okay, great advice. Yeah, there's a number of things that kind of evolving in the industry, and that's you can see it in the regulation and so forth. Everyone kind of, if they kind of police themselves, they're gonna help everyone out. There is a question in chat, so it says, hopefully you can see that as well. Bill, can you discuss further your commentary on renewals? How do you think about the collective journey with the ISO to get renewed versus risk it gets moved by the ISO? And then he goes on to say, what approaches does CFGMS works best in the renewal broker funder relationship?
Yeah, so we based on our model, we essentially have a self-policing mechanism, with our with our ISOs, and our referral partners and brokers. And so if conversion rates are not there, and as I said at the beginning, right, our guys' performance is absolutely number one. So one of the things that we do have on the technology side is all of our guys have their trackers and portfolio management tools that they are using to watch the payment history on any given transaction. And as that transaction, depending on the characteristics, depending on the industry, geography, SIC code, they may look to renew someone at 60% paid in, 70% paid in, 80% paid in. But those are all things that a broker partner will establish and work out with their own individual rep here at CFG. But what I can promise you is that we are very in tuned to things that are eligible for renewal. And like I said earlier, we are going to renew anything that is renewable. And if we start to see a trend where we're, obviously the most amount of risk that you take on a transaction is the first time you fund it with no payment history. As you get payment history, you get to you establish a track record with that merchant, and also a relationship with that merchant, and talking to them about their business and their capital needs. And if we start to feel that transactions are getting moved away from us after we take the initial risk on the renewal side, that's something that we would definitely take action on with an ISO partner. And to the extent that we are funding now 30 to 35 million a month, we feel like there's a lot of value to being a partner with us, as opposed to not.
Right, and that's a serious deal. Some brokers, new brokers or ISOs, don't necessarily understand, kind of that relationship and how it affects relationship and the concepts, and just moving a deal when you had it with them and not trying to renew or work out something with you guys, and then just kind of going behind your back and doing their own thing. Yeah, long term, it's just not going to work for either party.
That's exactly right.
Yeah,
and that's something that we would sniff out fairly quickly. And we want to partner with those, like I said earlier, who want a very long-term relationship. Yep.
Cut them off, or otherwise it's going to continue to happen, and it's really it's in poor taste at minimum.
Right.
All right. Don't be shy, anyone. Feel free to drop your questions in or speak up. Actually, there's another question right as I say that. What would you say are the most essential practices for growing and scaling a business? I assume you mean a broker business, Chuck. If not, then clarify that. But go ahead, Bill.
So it's something that that we've done from day one. I mean, we started right. You kind of have to fund your first million before you can get to 5 million a month funded, or 10, or 20, or 30. And so I'd be very disciplined and deliberate in how you scale. And I think one of the things that we say frequently around here is that you build the foundation. You build the foundation in a very, very solid way that allows you to scale, so that when you take the next step in a growth spurt, or whatever that may look like for your individual circumstance, you feel extremely and highly confident that foundation below you is solidly built. And then kind of every step builds on itself. I mean, we started in 2016 with a starter credit line that was $4 million, and we've now grown that to $105 million, and we've done that through steady but consistent performance from our underwriting teams, and building that track record.
Thanks for the question, Chuck. And as well,
sorry, Shane. And one other thing that that is really important, Chuck, is your reputation. Making sure that you have a reputation in the marketplace, or with your vendors, or partners, that is really solid. That you do what you say what you're going to do. That you're not afraid to identify problems and challenges in a very, very straightforward way, but in a professional way as well.
Great point. And if I could add to that, just kind of, it's something that at Funder Intel we kind of do is preach to everyone and help them, guide them, and before they even sign up for Funder Intel, we kind of look and find out who they are, if they're not a real person, if they're not using a real name. The online presence for everyone is hugely important. So whether you're on LinkedIn, have a company page on Facebook or anything else, all that ties together and it builds on your reputation. And it's a small industry. So if you're thinking of, kind of just fly by night tactics, you're going to be found out by the next funder, and funders talk to other funders. It's not anti, everyone, kind of talks to each other. And even if they're a direct competitor, they'll find out, all right, if you're broke and you're doing this or that, eventually you're going to be found out.
That's right. I mean, we've done that from the beginning. I mean, we've always used our real names, we've always had an online presence, and I think it was over the years kind of average at best, and we didn't think much of it because we really felt like, all right, people know us, they know how we do business, but we've really another thing that we've done over the past couple of years is really put a lot of dollars, emphasis, and resources into the branding and marketing side of the business over the past couple of years, to really kind of have that online presence, to know that merchants are coming to a really safe place to get their capital.
Yep. All right, so we have a few more minutes. I would kind of be remiss if I didn't mention actually an event that we are having. I'm just going to quickly say Funder Intel is having a mixer in Fort Lauderdale next week, December 6th at 6 p.m. So I just dropped the link in the chat. If you guys haven't already, if you're down in South Florida and you're not going, I don't know what's wrong with you, but certainly if you're around, we'd love to have you out there. It's a good amount of people, and you can see who's registered on the registration page that I just dropped on there if you're logged in to Funder Intel. There's another question in the chat. Can you see that? TMAGES dropped a comment question.
Can you read it to me?
Yeah. Can you comment on the debt consolidators legal firm activity that seems to have escalated?
It has escalated. And I think it's a
more of them, or just the way they're doing things?
Both.
Both. Okay.
Both. More of them, an expansion of some of the outreach and the tactics. And I would caution ISOs as they are approached. I know brokers and ISOs are in the business of monetizing leads. That is your business model. We absolutely get that and respect that. But I think the prevalence of these folks is because I think the environment, the broader macroeconomic environment has gotten more difficult, and I think more merchants are receptive to the message that some of these folks pitch. But I think largely the majority of them, and it's a shame, are really pitching a misleading message. One in which where there are merchants who get over levered, and there are merchants who need help in unwinding that or figuring out what is the best path for their business. But for those who just collect fees up front and then deliver very little or continue to collect fees along the way, without really adding any real value to the business, to me is just it's just not right. And I know that I know that there are some funders where this is very much a top of mind, and I think there are some folks out there who want to act very aggressively against these companies. But I think every company has to make its own decision on how to work with some of the third parties. There are a few who you can work with. But for me, it's just tough when your business line is built on a misleading message.
Mhm.
Or your business model.
Yeah, and those would be separate from reverse consolidation. Companies
Correct.
that provide reverse consolidation. Okay. Any thoughts on that product?
We've looked at it a few times. I know that there are some companies that do it successfully.
Mhm.
For us, we like things that are fairly simple,
Yeah.
and straightforward. And if they're even a little funky, we're probably not your stop for that.
Gotcha.
I'm sure if done right, this is a way to help some merchants that are in an over levered situation and try and get them back to neutral. And I think that's a valuable resource out there, because none of us wants to see anyone go out of business. And if there's a way to help or rehabilitate in the process, we want to do that. And as you know, I mean, we restructure, we adjust payments, we undertake reconciliation, all of the time, in our sizable portfolio, and that's part of the business. And when I say, the brokers have an important responsibility in really being an advising partner for their merchants, I think that's a responsibility that they should take very seriously.
Okay, great. Well, just a couple more minutes left, but we're not going to keep you and anyone else if there aren't any other questions. So, yeah, again, Bill, couldn't thank you enough. I think it's been, hugely valuable for most folks. At least I'll speak for them. But no, it's been good for me. And I appreciate everyone for joining us. So really, to your team for spreading the word and getting folks on and interested and a lot of good topics, tips for brokers and so forth. And, again, we'll be having these every so often, and, check back with us and subscribe. Well, you're already subscribed if you join the site, but, or join the Zoom. So, yeah, Jim, comment on there. Thank you. Appreciate
Shane,
it.
just let me, before we get into Jim, let me just say that if anybody is interested in the RBFC, they can contact me. I'll make sure to get them in touch with myself or Shane, right? And any of the members can get you in touch with the right folks. As I said, membership is very robust now, and I think more than ever, as people have had to have really had to comply with the things that were necessary in 2023. There's more and more interest, and it's welcome.
Great. Yeah. And I actually just dropped your link, CFGMS. So anyone who wants to get signed up with CFGMS, feel free to get on their website, or if there's any other direct phone number or anything else, Bill, should I drop in the chat or just go to the website and
Yeah, I mean, you can drop. I'm happy to drop my email address.
Okay, perfect. I'll do that.
Yeah, wgallagher@cfgms.com.
Okay. All right, that's in there.
Thanks to everyone who joined.
Yeah, no, thanks again, Bill. Your email address is in there, guys. So everyone who wants to email Bill, feel free to do so. Again, thank you so much. We will see everyone on the next one.
Great.
All right, everyone. Thanks.
Thanks, Shane.
Yep.